use when you pay expenses, don't pay cash. Use your credit card or debit card.
Mm-hmm.
So there will always be
Be a
a
record.
history, a record,
Yep.
and then you can actually use the bank statement as your bookkeeper.
Every year, thousands of people migrate to other countries in search for a better life.
Each one with a story to tell of courage and determination.
Adjusting to a new country is not that easy.
Here at Migrant Tribe, we honor you.
So join us as we share our stories from our journey down under.
Hello, everyone. Welcome to the Migrant Tribe Stories from Our Journey Down Under, episode 30. So, together with me in this episode are the other members of the tribe. There's Jasmine.
Hi.
And there's a Joey.
Hello, everyone.
And yours truly, this is Joseph. Now, so here in Australia, what time of the year is it? It's
COVID
tax
time.
time. Yes, tax. So, yes, no, not eating time. No. Yes, it's tax time of the year here in Australia. So many people get excited about the tax time. Why? Because of their tax refund. So we created this episode because there's still a lot of questions about how tax refund work. So we've invited a well-known tax expert and accountant. I'd like to we had him in our episode couple episodes back. Okay, so a few things about him. He owns his own accounting firm, and he's been practicing for. He'll let you know how long he's been practicing. So let me introduce to you Michael from MLV Accounting. Is that correct, Michael?
Yes, yes.
Yes.
Hello,
Hi,
how are
Michael.
you?
Welcome to the Migrant Tribe. Thank you for taking time off, and I know you're very busy this time of the year. How are you doing?
Yeah, we just finished my client, and then there's another one after. So we try to squeeze in this very important meeting, so we can share our knowledge to your viewers, or how do you call it, viewers or whatever.
Yes.
So
family.
that
You could say.
family, yeah.
Yes. Five of them. All
yeah.
five of them. Yes. Okay.
Yes.
Okay.
So they can, so we can help them maybe maximize their
Maximize
refund
their
or,
tax refund. Okay, so
Yeah.
pretty much that'll be the topic for today's episode. So Michael, first, okay, so let me start off with a first question. So why does the Australian government allow tax refunds? So what's the reason behind it? Because like when you say refund, it means like I overpaid. Did I actually overpay the government and then they're returning back the money? Is that how it works?
Technically, yes. Because when you work, there is a tax withheld that from your gross pay. Now
Mhm.
that tax withheld is based on your gross pay. Now, if we are allowed to claim some deduction against that gross pay. So the government allows that through the tax filing, through the tax return. Now the effect of that, if we claim deductions against our income, it will go down. Yeah. So the taxable income will go
Yep.
down. Therefore, the tax rate or the tax payable will be based on that lower income. So there will be a difference between the tax based on the gross income compared to the tax based on the taxable income, which is the effect of reducing your gross income with the deductions allowed. The difference is the refund. So you have to get that back from the government. You have to claim that. So that is why it is very important to really have a good strategy on how to reduce your taxable income by claiming appropriate and allowable deductions. So there are a lot of strategy that we can do. And
Could you
yeah, and
give us like
yeah.
some general tips? Yep.
Yeah, of course, very important here is to have a very clear documents of the deduction that you want to claim. So it is very important when you do your tax return, when you're in front of your tax agent or accountant, that you have this document. So this could be,
Mm-hmm.
so imagine you have to think what are the deductions that is connected to my work, and then get the invoices for that. So normally the normal standard that we can claim is mobile phone. Everyone uses
Yep.
a mobile phone now. It has everything, all the apps that we need.
Yep.
Internet connections. Because especially with COVID, everyone was working from home.
Mm-hmm.
Connected with internet is home office. So the government has given us a 80 cents per hour of
Mm-hmm.
working from home.
Mm-hmm.
So we can also claim that. So the government sometimes give us some statutory deductions that we can claim. We can use. So motor vehicle. If you are using your work, if you're using your car for
Mm-hmm.
work, we
Mm-hmm.
can also claim motor vehicle expenses. Now, in claiming motor vehicle expenses, if you are uh, if you are traveling more than 5,000 kilometers, you have to use the logbook method because it will give you
Okay.
more deductions.
Mm-hmm.
Now, with the logbook method, for you to do that, you have to do a 12 weeks logbook. So that is equivalent to 3 months. So you have to note where were you traveling, the odometer before and after, so for 12 weeks. And then the purpose of this logbook is to establish what is the percentage of business usage in the whole travel that you've done. Now, if you say you lose it for 80%, then all expenses for cars, you multiply by 80%, then that you can claim that. Now, so this is very good if you are really using your car massively.
Mm-hmm.
And sometimes if you buy a new car,
Mm-hmm.
it's also good because the depreciation of the new car you can claim. And then if you borrow finance
Mm-hmm.
to buy the car, the interest and the finance we can claim. So
Oh, okay.
that's very
I know
important.
that.
Yeah?
Right.
So, but if you didn't travel more than 5,000 kilometers,
Mm-hmm.
we can just use cents per kilometer method. You don't need to have a logbook, but you just have to note how many kilometers you've traveled
Mm-hmm.
during the year, and then you just multiply that by a certain amount. I think it's 77 cents, I think. There's a statutory cents per kilometer that we can use for that.
Mm-hmm.
And then, what more? And then for the more sophisticated clients, you can do investment properties, which
Yep.
is what we call negative gearing.
Yes. Yes. Negative
So we
gear. Yes.
always hear this negative gearing, but the essence of negative gearing is that there are more deductions or rental expense rather than rental income.
Mm-hmm.
Now, for example, to you buy a property and then you use that for investment. So someone is renting it. You are the landlord.
Yep.
You have a tenant. If they pay like 500 a week,
Yep.
so that's 2,000 a month. So that's 24,000 a year as
Year.
gross rental. Yeah.
Yep.
And then you have to reduce that with expenses
Expenses, of
related to
course.
your property, which is normally the main
Maintenance.
the main one is the interest expense of the loan.
Of
That
course.
is
Yep.
the biggest expense that you can claim.
Yep.
And the second one is the depreciation
Depreciation.
of the house and all the attached asset into it.
Mm-hmm.
So those are the main expenses, deductions.
Yep.
And then you can also use the council rate, water rate, insurance, and repairs. You have some repairs.
Mm-hmm. Yep.
And the agent,
Agent's
if someone is
fee.
agent commission, agent fee. So you can claim that. So in the end, there will be more expenses rather than income.
Mm-hmm.
So let's say you have an 8,000 net loss
Mm-hmm.
on that property, then you can claim you will reduce your gross income by 8,000. Therefore, it will reduce your taxable income. Therefore, you will have more tax refund when you do that. And so
Okay.
there are a lot of strategy, but the good thing about negative gearing is, aside from really using it to reduce your tax,
Mhm.
you have a property that is going up in value.
That's appreciating.
You know,
Yes.
that's appreciating, and you know that because we live in Melbourne
Mhm.
or maybe Australia, every people in the whole world want to go here.
Mhm.
So there's a demand for property. There's a demand for living space. So the prices of the property will really go up. And then of course, if you sell the property later on, there's what you call
Capital
gain
gains. Yep.
implication, capital gain tax.
Yep.
But here, whatever capital gain that you earn, there's what you call 50% discount. They give a 50%
A write
discount
off.
right, if you hold the property more than 12 months. So there's a lot of strategy there that you can use.
Mhm.
And and maybe we can all if you're in the higher bracket, you can also do salary sacrifice or what you call reportable fringe benefit. So this is very common for those in the health professional. If we have several work, the nurses that we
Yep.
have,
Mhm.
they do salary sacrifice of their income because the good thing about salary sacrifice is it will not be the amount will not be part of your taxable income, but it will go straight to the expenses that you wish to pay it from. So that's very common strategy as well. Maybe also the super contribution.
Superannuation. Yes.
You can have a contribution to your super and you can claim it as a deduction.
Mhm.
And also it's like there's also a what you call reportable super contribution. You can tell your employer that instead of paying you as a salary, you just pay my super. So that's what you call salary sacrifice. This strategy is also good if you are nearing retirement. If you're like 60 onward,
Yep. And you
59,
need to get
60,
your
61,
super to a higher level, right?
yes. So that's also one strategy that we can use. Also, you can also do a super contribution for your spouse, for your low income earning spouse. The
Mhm.
government also give you some kind of a rebate when you do that. So
Mm.
again, there's a different approaches to different taxpayers.
Mhm.
That's why it's very important to go to a tax professional so they can see because we have the experience.
Yep.
Like for myself, we have 4,700 clients.
Mhm.
So personally, I know the circumstances of most of them.
Yep.
So I can apply to you whatever experience I have in dealing with the other client taxpayer. And yeah, I think that's in a nutshell. In a nutshell, those are the strategy that you can use
Yep.
to maximize your refund or minimize your tax payable.
Okay. So what we'll be doing is for those people out there who might be interested in contacting Mike, we'll be putting his contact details in our notes in our description of this episode for him on his website, and you can get in touch with him through that. For me, one of my so mostly deductions are like the expenses that you can accumulate during the year. That's my usual problem is I'm very bad at keeping notes. I'm very bad of keeping receipts and all that. Do you know a method or a journal or an app that I can use to help me keep my expenses in order?
Yes. Yes. Before we have the shoebox, and then you just put all invoices in the shoebox. But now
Yes,
we have a
yes,
lot
yes.
of we have
Yes,
a
I
lot
don't
of
even have a shoebox.
so, uh,
so have we moved up from the shoebox
that's right.
now?
That's right.
The old way.
That's already good. That one. From John. So yes, we have a lot of software. But what my advice is,
Mhm.
if you when you pay expenses, don't pay cash. Use your credit card or debit card.
Mhm.
So there will always
Be
be
a record.
a record.
Yep.
And then you can actually use the bank statement as your bookkeeper. So all things you want to pay, use that. Because if you pay by cash, you
Pretty
lost
much
track
it's
of the
yes, the receipt.
then it's
Yeah.
gone.
Yep.
But if you use the
Your
bank
card.
statement or the card,
Mhm.
it is in your bank statement, you can actually go there and you can just check which one you actually
Would want to use as a
uh,
deduction.
yes,
Yes.
and because of COVID, because they will be lax. I think that the ATO will be lax in that in implementing the receipt, the
Yep.
invoice, because they actually encourage not to print the invoice, isn't it? When you just tap or so I think you can just use the bank statement, and if you really didn't claim a lot anyway,
Mhm.
and you are within the normal deduction range, then
Mhm.
the ATO will not really look at that. But the ATO will really look if you are claiming massively, and you're out of the range, because they already computed.
Mhm.
If your profession is, let's say, you're a nurse or you're an engineer, they already know how much should be your deduction. Normally, it's like this. Now, if you go out of that range because of circumstances
Mhm.
specific to you, then they will give you a warning. They will say that, oh, last year you claimed more, so this year
Don't
you have
claim
to be
too much.
careful. You have to be careful. You
Okay.
have to be
Okay. Okay.
If you
careful.
claim less, they will not ask you.
Yeah,
Oh,
but
okay.
if you
Okay.
claim more, if they said if you still claim the same level,
Uh huh.
and then we might ask
We
you. We
we
might
might.
audit you.
Okay. Okay.
So
So
it's
so
always
don't
like
be
that.
don't be too greedy. Okay, don't be too,
Yes, yes, yes.
don't be too greedy. Okay.
Probably
I
Just
have a
just to
curious.
question.
add that.
Okay.
I
Anyone
have a
has a
Just
question?
to,
Yes.
Okay,
yeah,
yeah.
yeah. Just to add. Actually, there's also an app that you
Mm,
could use. I don't know if you can see it.
mm,
On the phones, you could link it up to your mobile. Sorry, to your banking account.
Yep.
Like what do you call Pocket Smith or Pocket,
Okay.
and you can categorize. Yeah, you can categorize all your
Expenses.
transactions there.
Okay.
Which later you can use that when you talk to Mike.
Mm-hmm.
Yeah, and he can really easily understand the expenses. Now, reason why I was able to delve into that, by the way, just so you know, is probably the leading question to it, Kuya Mike, is um, the mindset that I had was like I had to change the structure on how I'm being taxed. And what would you suggest for someone, let's say someone that's actually still working, right? Now we do know that some people might not really consider having their own business, but would you consider them having their own ABN in such a way that, or can they have that kind of different structure in a way to protect their or reduce their tax deductions?
yes. So I think Joey was leading to the question that if you have a business,
Mm-hmm.
is it good? First, is it good to have a business, and how do we do that? If you want to pursue a business, how can that affect my tax return, or how can I do that? So the normal way of doing is to set up an ABN as a sole trader. So as a sole trader, as an individual in the Philippines, called single proprietor. Is
Yep.
that the
Yep.
one?
Yep.
But now it's sole trader. So it will be is- everyone starts as a sole trader. I started as a sole trader, but now I'm a company.
Mm-hmm.
So sole trader is you're testing the water, you're seeing if it's really not only a hobby, but it becomes a business. So the ATO says that if you have a business
Mm-hmm.
and the gross sales is less than 20,000, then they consider it more of a hobby.
Yep.
So for example, you started a business, a consulting business, you got 5,000 income, let's say. But because of the expenses that you claim as an as a business holder,
Yep.
because there are more expenses to claim if you are an ABN. The ATO gives you more leeway to claim. No, there are more
Yep.
lax if you have a business. So let's say your expenses is 8,000, but
Mm-hmm.
your income is only 5,000. So you have a carry forward. You have a business loss of 3,000. Yeah.
Yep.
But because this is important, because your gross sales is less than 20,000, so only 5,000, then you cannot actually reduce your employment income. You're being employed by the
Mm-hmm.
3,000 business loss But it will be a
Mm.
carry forward loss to to future years until such time that your business will have a gross sales of 20,000. So that's what you call because if the ATO didn't do that, then everyone can just open a business and they will just put everything there and they will claim deduction. So they're not
Deduction.
really into business, but it's more of a tax strategy or tax,
Yep.
it's more on the tax minimization, not on
Not
the
really to
actual
run a
business.
own a business or
Yes.
run a business.
Yeah. So, but let's say you earned more than 20,000
Mm-hmm.
and the following year, and then you have some income, so we can now you can now utilize the previous carry forward business losses that you have. And then there will come a time that you're doing good. Now you can now progress to a company because a company there's what you call limited liability.
Mm-hmm.
So the
Yes.
difference between a company and a sole trader is for a sole for as a sole trader, if you get sued, there's something that you did that you get sued by your
Mm-hmm.
supplier or
Mm-hmm.
customer, whatever. They can go after your personal asset
Yep.
up to your personal asset. So if you own a house
Mm-hmm.
and something happened to they sue you, there's a potential risk of selling your house just to pay them if there's a damage if you lose the legal case. But this is like extreme cases, but it could happen.
Yes.
Now, but
Yes.
if you have a company, you are only limited to the asset of the company. So, so the asset of the company, if there's no more asset of the company, then that's it. They cannot get your personal asset unless you did some fraudulent act as a director. Then they can do that.
Mm-hmm.
But normally they will not. It is only limited to the asset of the company. And then there are also other. I might mention that there are also other kind of form of entities that you can use or structure like a partnership.
Mm-hmm.
So partnership is like two sole trader combining as one. But again, the act of one partner is the act of all. So if one partner did something wrong, they might also go after your own personal asset. So it is the same with sole trader. It's just have a partner. So still, another entity is important is very popular here is trust, family
Trust fund.
trust
Yep.
or unit trust. That is a combination of a company. If you
Mm-hmm.
have a corporate uh, trustee and that is also limited to the asset of the company. And then the good thing about trust is you distribute the profit to the beneficiary, which is normally your family members,
Mm-hmm.
and even your cousin or your brother sister. You can or mother, father, grandparents. So as long as they're family related, you can distribute to them. But the problem sometimes all of our family they have their own income, so you cannot really distribute to them because they will pay more tax. You know. So
Yep.
that's
True.
another. It pays also if you have a lot of family members. Family trust is a
Mm-hmm.
good vehicle to spread the income. So that is very in the Philippines. I don't remember if we have trust, but here that is a very popular vehicle, trust. You know.
Yep.
Okay.
So
I have
okay.
yep. It's more about the profession rather than about the taxation.
Okay.
What do you think? What makes a good accountant? And if
Okay.
and are you considering yourself as one? And another question is, are you an accountant to your own company? If yes, why? If not, why?
Okay. Okay. Good. Good. First question: what makes a good accountant? Of course, um, um, for me, I say you have to empathize with your client. You have to know your client. So when you know your client, you can strategize better. So I think I listen to my client. I know my client well. But that's the reason why my clientele has increased like 30% every year. So as I told you before, I only started with 40 clients. Now we have 4,500 clients and still growing. I think we have like just for the last 2 weeks we have 100 new clients. So I know we're growing. We're still growing. So I think that a good accountant is a good hearing. You listen to your client, you understand what is their tax issues, and you implement and you guide them. Because you have to have a good communication with your client so that they can open up to you, and you will advise them better. Good accounting is also you have to be up upkeep or abreast with with the current tax laws, so you can implement the new the tax the new the regulations to your client. And number three, you have to be always with them. You're always there, so you have to be there for them, because also time is of the essence, especially like KPA. If they want to apply for job keeper, job seeker, business grant, you have to be there and really process it for them. And as an accountant, yes, I do my own books.
Okay.
Because I do my own books, of course, but I delegate it to my staff to do it for me sometimes, usually. And also, because we are a privately trading company, we're not a public listed one, so you don't need to have an audited financial statement. You can actually just do it, because here in Australia is what you call self declaration. Like you, when you do your individual tax return,
Yep.
you come to your tax agent and you just express what you did.
Yep.
So it's self declaration. You don't need to show anything. You just have to declare it. So the
honesty
same with
system.
me.
Yep.
Yeah, correct.
Okay.
So it doesn't have to be audited. But of course, if you're publicly listed, then you have to be audited. But as a private individual or private company, you can do it. But of course,
Within
the
bounds.
rules, that is
Within the
within
rules.
the bounds of the rules
Yeah.
of the law.
Thank
Okay.
you.
Thank you. Thank you,
Thank you.
Michael.
That's a good question.
Yeah. Just one. This is not really so much. It's more like a fun question. Like, just curious. Like, when people receive their tax refunds, what do they usually spend it on? Do they buy gadgets, go on holidays?
Holiday. But there's no
Holiday,
holiday
okay.
now. It's lockdown.
Not,
You know?
not,
So I
well,
think they buy maybe television or
or a new phone or something.
a new phone. But most of them they pay, because we have a lot of student client. They pay their tuition, because
Okay, good,
as you know,
good.
the
At least
student
that's
yeah
that's a good place to put your refund. Okay.
tuition fee, yes.
Thank you, Michael. It was such a pleasure to have you on Migrant Tribe, and yeah, and for all of you out there, we'll be putting in his details if you want to get in touch with him. So again, thank you to all our viewers. See you next week. Yep, this is Joseph. Bye.
Thank you.
Thank
Bye.
you.
Bye.